Hello and welcome all bulls, YouTube, Substack, and anybody else interested in investing, saving their money from a down market. This is actually a pretty urgent call to action. We're not going to make any trades. We're not going to blow our top. But anybody that's seen yahoofinance.com or Fidelity or has a pulse will know that inflation numbers came out very hot today. 3.5% CPI raise in a quarter. And that is a year after year number, so it's not as though, always remember that when the CPI comes out and it's plus or minus, that's actually from the previous year, not the previous month. So if we were sitting at 8%, now we're at 11%. If you think about that, that's not necessarily the best time to invest. Follow with me. This is the game plan. You are safe. We do have this. So, two things. We've had a stock market that looks like this over the past, 13 years? Since things settled down in 2011, we've had basically an artificial steroid pumped into the market due to monetary easing, trying to save ourselves from hitting another depression. Everything's been cool. We're all happy. The market's good. I like to use the word we're all fat and happy. So since then, 2009, everything went to you know what. This past year, we've had a lot of great performance out of bad stocks, and that's a scary sign. So when you take the S&P right now, it's down today. Everything's down today. And why is that? Because we just baked in the fact that interest rates are going to go up by 3.5% on top of an 8%. And if you've ever followed me before, you know that I don't believe in CPI at all. CPI includes things like the price of a ticket to the New York Zoo, the Bronx Zoo. It includes prices of corn, but it doesn't include prices of oil. I prefer, and you'll learn through following me, to use the spread on the 10-year Treasury and the 10-year Treasury protected security called the TIP. We'll get into that later. Again, I'm making this video because we're looking at the market. We've made quite a bit of money. How do we save it? How do we fix it? When inflation or bond prices go up, when the price for free money to borrow becomes not free anymore, like in 2011, and now it's at 11%, and I believe it's a lot higher than that. Just go buy a Whataburger. It used to be $8, now it's 12. Yeah, I thought I just had a notification. I didn't. So stick with me here, right? Typically bonds, not even typically, all times, you can bet your bottom dollar on it, move upwards when stocks go down. Stocks go down, stocks go up rather, and bonds go down. This is a bearish signal. We already know that tech is overinflated. We have companies like Apple, companies like LinkedIn, companies like Facebook that are trading at multiples of 80, 90%. Those are the guys we're going to look out first. So we're going to look out for tech to drop. And if you were to pull up your stock master today, and you've kind of followed along to learn the sector rotation strategy that we use, is when the market's going to go down, we find either cash or we find investments like energy stocks, particularly utility stocks, private prison systems, casinos, alcohol sales, Philip Morris. These are defensive stocks. I actually plan on those making money this year regardless of where the market goes. On the other hand, anything that's going to rely on results in the future, so any type of small cap, any type of mid cap, we probably want to stay away from. This is not a call to action to sell anything you have. This is telling you that I have you taken care of, we are watching this, and we only have 4 tech stocks out of the 20 in the ever bullish portfolio. A wise investor would today simply put a trailing stop loss or a limit order. Very easy to do. If you don't know how to do it, you can call your broker, they'll tell you how to do it. And for all my customers in the portfolio, you know the top stocks that I'm talking about because you've already got them. And we're gonna just let them either set a 3 to 5% stop loss underneath it And now we can breathe easy. All those other stocks I have in there currently really won't be that effective. And if they do become, we'll sell the cash and we'll save your nest egg while all the other guys go down, and then we'll buy probably when they get out. So chase ever bullish, simple lesson. I also want you to take a quick look at the RSI, the 1 month RSI of the market. We're dropped below 50 now, so the S&P 500 put it on a 1 month chart, and check out the trend is up for stocks, the S&P. The RSI has taken a really hard break to the negative. That means we're gonna have a sell-off. It typically happens in May. You've heard sell in May, stay away. Typically the rule there is to buy back in October, but the last 14 years that's only actually worked once. So I think we're gonna go back to the historicals. I wanna take care of my bulls. Anybody else who's not on, next time we're gonna have one of these type of kind of warning signs, you gotta be a paid subscriber. So I love y'all, I'm taking care of y'all. Go have fun, I'll be here working for you, and subscribe to the everbullish.substack.com and buy a portfolio at everbullish.com. It's 1/20th of the cost of the cheapest investment management out there, and it's shoot, I got it, 1 second. We hit low power mode. We're back. So, back to it. Join the Substack, subscribe. Love you guys. Take care. AFG, LFG, LGR. Let's go.